Stocks are higher this morning, with the S&P 500 approaching all-time highs, while mortgage bonds remain flat so far. Markets are feeling optimistic that the U.S.-Iran conflict may be winding down soon. President Trump stated that the war is very close to being over, and that talks in Pakistan could resume over the next 2 days in hopes of reaching a resolution ahead of next week's ceasefire expiration. Trump also explained that the blockade of the Strait of Hormuz has now been completed, effectively choking off Iran from imports and exports, which is already having a significant financial impact. He added that China has agreed not to provide weapons to Iran and that the strait will eventually be permanently reopened, although that remains to be seen, as traffic through it is still pretty much non-existent. Treasury Secretary Scott Bessent offered some calming words for the markets, saying he believes the oil shock will be transitory and that inflation outside of oil is under control. He noted that while the Fed needs to cut rates, he understands if they want to wait for more clarity on the current uncertainty. Import prices were released this morning, rising 0.8% in March. While that's still a high number, it came in well below the 2.4% rise that markets had expected. Similar to yesterday's PPI report, this increase was almost entirely due to oil prices. When you remove petroleum from the data, import prices only rose 0.1%. That means outside of oil, we are not importing any meaningful inflation. If you're thinking about buying, refinancing, or just want to understand how these global shifts affect your financial strategy, I'm here to help. Reach out today for a personalized strategy, whether you're buying, refinancing, or planning ahead. Let's make sure you're positioned to win in this market.